Here we shift to Europe. And when we look at what's happening with Europe, I don't think anyone's going to be surprised to know that CPI came in above expectations. For February, it was expected at 5.8, came in at 5.9. Again, there's not much to say outside of this is going to continue, and March is going to be that much worse than February, just given the timing of Russia-Ukraine. Construction output, as we said in January, we expected it to go up. We do expect it to go up again in Feb and then start to slow down as headwinds continue to mount in March. But January, February should be strong and then start to see a bit of that rollover. And here's one of the reasons why. So Evercore ISI puts out, I think, this great report where they look at, and again, the Chinese one isn't as good, and again, it's good, but it's a little bit limited as to what it looks at. But the Europe one is actually fairly strong. And when you look at the company's survey diffusion index, European sales March estimate is negative 12.5%. So when you look at new orders in terms of in February, it was it was 57. So just look at the sheer drop that is expected to come through. And when you look at how the consumer is going to panic, how you're already seeing less people travel to Europe, it's becoming this overarching theme where, again, we continue to see a big negative in terms of new orders, current orders, and activity in March. So that's why we're saying for construction, because it's a look back, January was good. February will be better. March is going to be a little ugly, and this is kind of that prerequisite and that leading indicator. Normalized index of SEW and Centex, latest value in March. You're getting an idea. There's a big negative move. So Eurozone Composite PMI. So when you look at just the surveys, consumer sentiment has massively gone negative. And as that comes through, we're going to continue to see a big issue in terms of where things are going and what is happening in general when you look at some of the underlying pieces and the underlying problems when you just look at the consumer. The consumer can't spend, and that's what they're struggling with. But that's when you start looking at the Euro rate index futures. There's an expectation that rates are going to start going up because inflation, they're going to try to get in front of inflation. But when you start looking at wages haven't gone up. So you're looking at this and say, okay, well, inflation's exploding. So the ECB has to do something, but wages haven't gone up. So they really need wages to go up before they start raising. And now you're in this weird conundrum of the self-fulfilling prophecy where you're going to see, I think, a disappointing move. They will raise rates to a degree, but it's still most likely be negative because when you start looking at the indicator of negotiated wages is still fairly low, and they would like to see this ramp up, but the consumer hasn't been, and this goes back to 2010. We've never really seen the European employee, the worker, have any real negotiating power, and I think that's a bigger problem in terms of what's happening in Europe as a whole, outside of just COVID, outside of just right now. But a much bigger problem that continues to reverberate through the system, which is, gave rise to the UK and British exit, has given rise to some of the anger against the Eastern Bloc in terms of the movement of workers from one country to another. There's really not a lot of wage power and wage negotiation, which is coming to, I think, a bigger problem in terms of where wages can do to keep up with underlying inflation. Construction output, again, rallied, but you can see it's still off the trend, and it's going to be hard to see that come back through. Belgium had reported their consumer confidence, which, as we said, very negative, and it's something that we expect to see the Eurozone confirm. Germany PPI, as you can see, surging to new highs. The survey was for 26.1, came in at 25.9. This was February, so we all know what happens in March. So again, just more pressure just throughout the system, kind of the tip of the iceberg when you look at what is coming in general. So now in the next segment, we're going to start with emerging markets and then go deeper into what is happening in other areas of not only just China, but also what is happening with other ASEAN nations.